Hello everyone, welcome back to my YouTube channel. Today we are discussing the latest developments surrounding the Vietnamese Dong, the newest exchange rate updates, the future outlook for Vietnam's economy in 2026, and what these changes could mean for VND investors around the world. Over the last several weeks, global investors, forex traders, and international market watchers have been paying very close attention to Vietnam, as the country continues to strengthen its position as one of Asia's fastest-growing economies. The Vietnamese Dong has once again become a major topic of discussion because of Vietnam's rapid export growth, increasing foreign direct investment, expanding manufacturing sector, tourism recovery, and the government's continued focus on economic modernization. As of today, the Vietnamese Dong remains relatively stable against the US dollar, despite ongoing volatility in global financial markets. Recent market data shows the USD-VND exchange rate trading near the 26,300 to 26,350 range. While analysts continue to monitor inflation pressures, Federal Reserve policy decisions, and global trade conditions that could influence currency movements. During the remainder of 2026, Vietnam has continued to attract international attention because its economy remains one of the strongest performers in Southeast Asia. Economic analysts say that Vietnam's export-driven growth model is still producing strong momentum, particularly in electronics manufacturing, textiles, infrastructure development, renewable energy projects, and foreign investment expansion. Several international financial institutions believe Vietnam could remain among the fastest-growing economies in Asia throughout 2026, as global companies continue diversifying supply chains away from other manufacturing centers and into Vietnam. One of the most important reasons investors are closely watching the Vietnamese Dong right now is because the State Bank of Vietnam has maintained a relatively stable monetary policy despite rising uncertainty in the global economy. Vietnamese financial authorities have repeatedly emphasized that maintaining inflation control, currency stability, and investor confidence remains a top national priority. Analysts say this approach has helped prevent excessive currency volatility, even while many emerging market currencies experienced sharp fluctuations during periods of global uncertainty. According to recent forecasts from major financial institutions, the Vietnamese Dong could continue trading within a controlled range through much of 2026. Some forecasts suggest the USD-VND exchange rate may remain near the 26,100 to 26,400 range, depending on global economic conditions, US interest rate policy, and trade performance. Analysts from international banks say Vietnam's stable export sector and steady inflow of foreign direct investment continue supporting confidence in the currency. At the same time, investors should understand that the Vietnamese Dong remains a managed currency, meaning the State Bank of Vietnam plays a significant role in controlling fluctuations and maintaining financial stability. Unlike freely floating currencies, the VND is carefully guided within policy limits to avoid sudden market disruptions. This means the Vietnamese Dong generally moves gradually, rather than experiencing dramatic overnight changes. Market experts say this managed system helps protect Vietnam's export competitiveness while also preserving investor confidence. Another major factor supporting optimism around Vietnam's economy is the country's manufacturing expansion. Vietnam has rapidly become a global manufacturing hub for electronics, consumer goods, automotive components, and technology products. International companies continue relocating production facilities into Vietnam because of competitive labor costs, improving infrastructure, strategic geographic positioning, and strong trade relationships with major global economies. Manufacturing activity has remained strong during 2026, with industrial production and export demand continuing to support economic growth. Foreign direct investment is another critical driver behind the long-term outlook for the Vietnamese Dong. Recent economic reports indicate that FDI inflows into Vietnam have remained strong throughout early 2026, especially in technology, industrial manufacturing, logistics, and energy sectors. Investors from Asia, Europe, and North America continue expanding operations inside Vietnam, which creates long-term demand for the Vietnamese currency and supports economic development across multiple industries. Many currency investors are also paying attention to Vietnam's ambitious economic growth targets for 2026. Government officials have outlined plans aimed at maintaining extremely strong GDP expansion, with some projections targeting growth levels above 8% and potentially approaching double digits under optimistic scenarios. Analysts say achieving these targets will require continued export growth, infrastructure spending, private sector investment, and stable global trade conditions. One important point investors should remember is that a strong economy does not always automatically result in a dramatically stronger currency. Vietnam's economic strategy relies heavily on export competitiveness, and maintaining a relatively stable and affordable currency helps Vietnamese goods remain attractive in international markets. Because of this, analysts generally expect the State Bank of Vietnam to continue balancing economic growth with exchange rate stability, rather than allowing uncontrolled appreciation of the Vietnamese Dong. During the past several years, online speculation surrounding extremely large Vietnamese Dong revaluations has continued circulating across social media platforms and investment communities. However, professional economists and international financial institutions continue emphasizing that any long-term appreciation in the Vietnamese Dong would most likely occur gradually over time through economic growth, rising productivity, and controlled financial reforms, rather than through sudden overnight changes. Investors are encouraged to focus on verified economic indicators instead of unrealistic rumors or unsupported claims. Current economic data shows Vietnam's economy continues moving forward despite global challenges. Infrastructure spending has increased, industrial production remains strong, tourism recovery continues improving, and retail activity remains resilient. Public investment projects in transportation, energy, logistics, and urban development are also expected to contribute to economic momentum during the remainder of 2026. Inflation remains another key topic for Vietnamese Dong investors. Analysts say inflation pressures in Vietnam have remained relatively controlled compared to many other developing economies, although rising energy costs and global supply chain disruptions continue creating risks. Some economic forecasts expect inflation to remain within manageable government targets during 2026, helping maintain macroeconomic stability and investor confidence. Another important development influencing the Vietnamese Dong is the global interest rate environment. Decisions made by the U.S. Federal Reserve continue affecting currency markets worldwide, including emerging market currencies like the VND. If U.S. interest rates remain elevated for an extended period, pressure could continue on emerging market currencies because investors often move capital toward higher-yielding U.S. assets. However, analysts believe Vietnam's strong economic fundamentals may help cushion excessive volatility. Trade relations are also playing a central role in Vietnam's economic future. Vietnam has benefited significantly from international trade agreements and growing exports to major global markets. Electronics, machinery, footwear, textiles, agricultural products, and industrial goods continue driving export revenues. The country's integration into global supply chains has become one of the strongest pillars supporting long-term economic expansion. Some analysts believe Vietnam may become one of the most important manufacturing economies in Asia over the next decade if current trends continue. Rising investment in semiconductor manufacturing, renewable energy infrastructure, logistics systems, and advanced technology production could further strengthen Vietnam's position in global trade networks. These developments may continue supporting international confidence in the Vietnamese economy and financial system. Currency traders are also monitoring Vietnam's foreign exchange reserves and central bank policy actions. Maintaining adequate foreign reserves is important because it allows the State Bank of Vietnam to stabilize the currency during periods of market stress. Analysts say Vietnam has continued improving its financial resilience through careful monetary management and controlled exchange rate policy. Meanwhile, Vietnam's tourism industry has continued recovering strongly during 2026, helping generate additional foreign currency inflows into the economy. Increased international travel, hotel investment, aviation recovery, and tourism-related business activity may further support economic growth during the second half of the year. Tourism recovery has become another positive factor, supporting confidence in Vietnam's broader economic outlook. International banking institutions continue releasing optimistic reports regarding Vietnam's future economic potential. Several major analysts believe Vietnam could sustain high GDP growth rates over the coming years due to its young workforce, competitive manufacturing sector, rising consumer market, and increasing integration into international trade networks. Some long-term economic forecasts even suggest Vietnam could emerge as one of the world's fastest-growing economies over the next several decades. However, investors should also understand that risks remain present. Global recession fears, geopolitical tensions, energy price volatility, international trade disputes, and fluctuations in global demand could all affect Vietnam's economic trajectory. In addition, slower growth in major global economies could impact export demand for Vietnamese products. Analysts say maintaining balanced expectations is important for anyone following the Vietnamese Dong market. Recent financial reports also suggest Vietnam's banking sector could experience increasing credit demand during 2026 as businesses continue expanding operations and infrastructure projects accelerate. Analysts believe controlled credit growth may help support economic activity. Although policymakers are expected to carefully monitor inflation and financial stability risks, the Vietnamese stock market has also attracted growing international interest, with some analysts expecting continued foreign participation if economic reforms and market modernization efforts continue. Increased capital market development could help Vietnam attract additional foreign investment flows in coming years. For long-term VND investors, many experts emphasize the importance of focusing on Vietnam's broader economic transformation rather than short-term currency speculation. Vietnam's continued industrialization, infrastructure development, export expansion, technological advancement, and growing middle class are viewed by many analysts as the real drivers behind the country's long-term financial outlook. The Vietnamese Dong remains one of the weakest currencies by nominal exchange value compared to the US dollar. But economists explain that nominal currency value alone does not determine economic strength. A lower nominal exchange rate often reflects historical monetary structure and export-oriented policy, rather than economic weakness by itself. Vietnam's leadership continues emphasizing modernization, industrial competitiveness, digital transformation, and infrastructure investment as central pillars of future economic policy. Large-scale transportation projects, urban development plans, renewable energy investments, and manufacturing expansion programs could all play major roles in shaping Vietnam's economy throughout the remainder of this decade. Many international companies are also increasingly viewing Vietnam as a strategic alternative manufacturing location due to rising global diversification efforts. Supply chain restructuring after recent global disruptions has encouraged multinational corporations to expand operations within Vietnam, creating new opportunities for employment, industrial development, and foreign investment. Financial experts continue advising investors to approach all currency investments carefully and realistically. While Vietnam's economic future appears promising, according to many analysts, Currency markets remain influenced by numerous factors, including interest rates, inflation, geopolitical developments, global trade conditions, and central bank policy decisions. Responsible investing requires careful research, diversified strategies, and awareness of market risks. As we move deeper into 2026, many investors will continue monitoring key indicators, including export growth, inflation data, tourism recovery, foreign investment inflows, manufacturing activity, and decisions from the State Bank of Vietnam. These factors will likely play major roles in determining the future direction of the Vietnamese Dong throughout the year. Overall, the latest developments surrounding the Vietnamese Dong continue attracting global attention because Vietnam remains one of the most dynamic and rapidly developing economies in Asia. Strong exports, rising foreign investment, manufacturing growth, infrastructure expansion, and stable monetary management continue supporting confidence in the country's long-term economic outlook. While short-term currency fluctuations remain possible, many analysts believe Vietnam's broader economic transformation story is far from over. For VND investors, the key message from today's update is that Vietnam continues building a strong foundation for long-term economic growth. The Vietnamese Dong remains closely managed by policymakers, and most professional forecasts suggest gradual stability rather than dramatic overnight changes. Investors who continue following verified economic developments, official policy announcements, and credible financial analysis will likely be in the best position to understand the evolving outlook for the Vietnamese Dong in 2026 and beyond.